Well, Happy New Year, Happy New Year, Happy New Year. Can you believe it's 2009? Happy New Year. It's Joy Ruffin coming to you from the Sunshine State. And tonight it's all about leading ladies, leaving legacies, living legacies. And tonight we're going to be talking about financial security. Covers a lot of territory. And my guest tonight is going to come to you and share a lot with you that will be beneficial to you. So what can I say? My clock here says 6:57. It said start the broadcast, so we started. We'll have to synchronize the clock so that we're all in sync. But you ladies who are here, thank you for being here. It's always good to see you here. Tonight, Cynthia Straus is my leading lady and our guest tonight. Cynthia is one of the few native Floridians that I've met. Yet, she was born in Florida, but not more or less raised. They hail from New Jersey and New York City. Her father was in the insurance business, and so she majored in music therapy. But you know what they say, the apple doesn't fall far from the tree. And at some point in time, she decided that she was going to go into the insurance business too. And that's exactly what she's doing now. She and her husband, they moved to Florida in the 90s, and she got to work into the insurance business, and that's what she's doing now. Cynthia has a wonderful background. I met her at one of my favorite women's networking groups, the Women's Prosperity Network. I love this group of women because one of our main mantras is we don't gossip. We just meet and connect and support, aid and assist each other. And when I met Cynthia at a meeting not too long ago and we sat at the same table, we had instant chemistry because we both have the understanding and knowing about insurance. Tonight, my friend, what she's going to do with you is share with you a lot about insurance and how it can benefit you. So I'm going to bring Cynthia over. Cynthia, you're on camera right here and now. Hello and welcome.
Welcome, Joy. It's so wonderful to be here. Thank you for letting me be on your show. I really appreciate it. And Happy New Year to everybody out there.
Happy New Year to you, and thank you for coming. It's my honor and my pleasure to have you here, Cynthia. One of the ways that I always start this show, and I'm going to ask you to tell us, I mentioned that your father was in the business and the apple doesn't fall far from the tree, but tell us why you fell in love with insurance and what it affords for you and why you want to share that knowledge and knowing with so many others.
Well, I came to realize that insurance, without it, people can be just left in a terrible, desperate situation. And I just became passionate about helping people to find a way to make sure that they have financial security and peace of mind when those situations happen. And they happen to all of us in all families. There can be a heart attack, or there can be a disability, or someone passes away, or they have to go into long-term care. Every one of us has been touched in some way by these situations, and they're always difficult to handle. But then to have a financial burden on top of that, if there's any way that we can help alleviate that problem, I just want to be there so that they can get through these situations in a way that doesn't financially devastate them.
I hear you loud and clear, and I really value and appreciate what you're saying because I speak from experience, Cynthia, and I know that none of us really foresee and think about when some type of disability or an illness or any kind of tragic happening occurs in your family. But when it does, no matter how financially secure you are, you need more and you need to know more, have more awareness of what could happen. And I think when you speak about financial security, that's what you're talking about. Now, we could talk about how you go about that, living benefits and retirement funding. Which should we start with first? Because they're both very, very important.
Well, I'd like to start with living benefits first and still get to the retirement too. A lot of people aren't aware when they hear the words life insurance, they just think of it really as death insurance. They just think that all it does is help you when somebody dies. But the new type of life insurance, many of the carriers have what's called living benefits, and it means that you can actually accelerate the death benefit that you would normally get from when somebody passes away. You can actually accelerate those funds and use them if you're terminally ill, critically ill, chronically ill, or disabled. So when you really need the funds because you're out of work because of a situation like that, you don't have to wait to die to access those funds. You can actually access up to policy goods, sometimes even up to 95% of the face value. You can get those funds.
I
So,
think that that's one of the big misconceptions that people have when they think about living benefits and even somewhat so many of the other names that they have. People think that it means death, and it doesn't mean that really at all, not in the truest sense. So how do you qualify and make clear to people that living benefits benefit them? It speaks for itself, but yet there's confusion about that. So how do you separate and explain that to people?
well, I think the best way is really by telling stories. And if it's okay with you, I'd like to tell one story that I
Yes.
know of that I think a lot of our women will for sure relate to, whether they do personally or know someone that's been through a similar situation. There's
Yes.
one gal that I know in her early 30s. She was diagnosed. Her medical insurance would not pay to cover an experimental uh, method to deal with this. She had to go to Europe to go have this experimental treatment. Otherwise, her prognosis was really that she only had about 6 to 12 months to live. She
Wow.
went to Europe. She was able to accelerate her living benefits. I believe she was able to get somewhere between $30,000 and $40,000 out of her insurance from her life insurance policy. She used that money. She went to Europe. She had the treatment. She is still alive today. She has 2 children, and it was a life-saving type of policy. So I can't speak more highly of policy for people.
No, you cannot. That's a good story. And I like the way you preferenced that and began that because it is true. And I'm learning this for myself that stories relay and connect whatever it is you're trying to communicate almost, not almost, better than anything else. So now tell us a little bit about retirement benefits because for me, this program is for the ageless woman, but it's also for women overall. So many times you think about retirement benefits, but you don't really get the nuts and bolts and the gist of it. So explain to us a wee bit more, and especially for women these days, more about what we ought to know about retirement benefits and how they will benefit us in the long run.
Sure. Um, Through the types of policies that I can provide, and other life insurance agents can provide. There's a policy which is called an index universal life policy, and there's also fixed indexed annuities. So depending on your situation, one or the other of these can be very helpful towards your retirement. Especially, you look at the stock market and you see how crazy the stock market can be going
Yes,
up and down and up and down, and it can make one feel very uncomfortable and
yes,
unsure of things. With the fixed indexed annuity and the index universal life, they are guaranteed to only go up. They never can go down. Now, they can stay at zero if the stock market is not doing well, but they will never go down. So they don't necessarily, as the stock market may go, there's usually a cap, but they'll go up when the stock market is doing well. And then they'll stay, let's say you had 100,000 in there and the stock market dropped, you'd still have 100,000. And then let's say the market goes up again, your money would grow from that 100,000. So you don't have all the dips. So it's a very secure way. So if somebody starts that when they're young enough and they put money into it every month, then by the time they're ready to retire, they can take out money from it. They can borrow money from it, and they can also get a monthly income from it, depending on how they set it up and what they want to do.
I like that. Now, based on that, because some of my background is insurance as well, I don't know if this is fitting, but I go intuitive and gut. Tell us the difference between what you just explained as far as annuities and retirement funding and plans and all of that. How does what you're doing different from what we have so many today? They call themselves financial planners. separate for us what you're doing and what they do, and if you need both or one.
Well, if I am not, quote, a financial planner, because I only do, though I mean, I do help people with their finances, but I'm not certified, quote, as a financial planner. But I can help people with this type of index universal life and the fixed index annuities. Now, if somebody wants to invest their money and they want to take more risks and they want to have bigger returns, but they're not that concerned that they may lose their money too, then they need to have that type of financial planner who can invest in those mutual funds or into stocks and bonds, etc. But I can help them. We call it safe money. You want to keep some of your money safe, this is the way.
Cynthia, you're right on the money. You're right on the money, because that's what I wanted our audience to hear. Because many people misconstrue and they mix up, we're all guilty in different arenas, a financial planner, a insurance person, annuities, retirement funding, and all of that. Your explanation was spot on, because you're talking, when you speak about financial planning, you're talking about people who are more willing and able to take risk with the monies that they put aside. They have X amount here, A, B, C, D, and they'll take from A and do a little bit more risky business with it, as opposed to annuities, which is, you use the word safe. So tell us a little bit more about annuities, because this seems to be a buzzword now, especially for people who are getting ready to retire, more so than it was years ago. So speak to us a wee bit more about annuities.
Okay. Well, basically, the way I can help somebody with an annuity, let's say you worked for ABC Corporation 10 years ago, and you have what I call an orphan 401k, and it's just been sitting out there. You never moved it anywhere. It's just been sitting there, but you don't really feel comfortable about it because it's just sitting there in some mutual funds that you really don't even know anything about. It's been going up and down with the market. You can take that you can move it into a fixed indexed annuity without any tax consequences. It will be in what I call a safe place, and it can continue to grow, and it will never go down from whatever value it was at the time you moved it out of the 401k into the fixed indexed annuity. It will stay at that value or grow and get higher. So that's why I like to help people to do that.
Now, you mentioned something that was very big back in my day, many, many moons ago, 401k. I just get the intuitive gut feeling, and you tell me, because I could not, I'm most likely not on point with it, but I don't think 401ks are as big and huge as they used to be. Is there any merit to that at all? Are 401ks, are they still as popular as they used to be? Are people using?
I think they are. Well, if you are employed by a regular corporation, a larger company, I'd say almost all of them have some sort of 401k program that you can invest in. And most of the time, the employer will put in a percentage also. So my recommendation is, if you are currently employed with a company and the employer is matching 2% or 4% or 6% of what you put in, that you should put in whatever the matching is. I don't recommend going above what the matching is. I think you should take your money invested elsewhere. But if they're going to match 4%, I'd say put 4% into it.
You know why I love speaking with women like you, because the way that I addressed that question to you, there was a reason and madness behind it. Because today, you and myself and many of the others who will be tuning in now and later are entrepreneurial business people. So their awareness and sense and knowing and embracing of a 401k is totally different. So the terminology and the usage of that is different. So they would be more interested in financial security through living benefits that you speak about here. Life insurance with living benefits would be more appealing to that entrepreneurial persona than someone who's starting out a career and working for a corporation. How do you address and speak to that?
Well, one thing I will say to people, um, what's the figure? I think that 60% of Americans have some form of life insurance,
Yes.
but most of them have it through their employer. And the way I look at that is that that's like you're renting insurance, because if you change employers, sometimes you can take it with you, but most of the time you can't. And also, it's usually not enough life insurance either. It maybe will cover 1 or 2 years' salary at max. So when people say, oh no, I don't need it, I have it, uh, I like to explain to people that I don't even count that. Yes, it's good, of course, you want to, life insurance and you can take advantage of that. Go ahead and take advantage of that. But you need to have life insurance that you own yourself, that if you change jobs, you don't lose it. And also, if people say, oh, well, I'm working, I've got this life insurance, I don't need to get it yet. But as you get older, the premiums go up. So people should be getting life insurance when they're in their 20s and 30s while the insurance premiums are low.
There's a lot of truth to that, but you and I both know that it's very difficult to convey and convince a younger generation that they need and will need this later on. So how do you go about communicating to them this need to acquire it as soon as they're able and it's possible for them?
Well, people tend to think that they're immortal and nothing's going to happen to them. But I
Yes.
personally know somebody that, he passed, he was in a car accident. As a matter of fact, this is so fitting. This was many years ago because I'm older now, but I was in my 40s. We'd gone to a New Year's Eve party. I was dancing with this guy, life of the party. 2 weeks later, he was in a car accident and passed away. His wife and daughter, they ended up moving back to Chicago where her family was. I honestly don't know what the insurance situation was, but I'm just pointing that out that we don't know. We do not know what tomorrow will bring. Anyone have a car accident any day. So, being 20, 25 does not guarantee that something isn't going to happen to you.
Oh, absolutely.
Another good one. Yeah. Also, I know somebody in their 20s that got cancer and, living benefits. So, and he didn't have insurance, any life insurance, with the living benefits. But you don't know. You just don't know.
You don't know. Well, you don't know, but my husband was an insurance guy and had his own commercial insurance brokerage business. And one of the things that he often said to me, and my husband is a natural born salesperson, he said it's like selling air because everybody breathes it in, but nobody wants to purchase it, because it's free air. And I say that to say that insurance, it really is a wonderful, needed business, but it's not one that the average person thinks about. It's not something that they feel that they need. They feel that they can hold on and wait until. How do you approach and address a person like that? And where do you find most of the people that you're working with? Where and how do they come to you? Or how do you go out and get them?
Okay, well, I'm the Straus agency is actually affiliated with an insurance marketing organization called Equus Financial.
Great.
And what Equus Financial does is that they actually send out letters to people that have either recently bought a home or refinanced their home. So when you have a mortgage, you want to make sure that mortgage, and we present them with a policy, a 30-year term policy that covers the period of time of their mortgage. So I think, especially if you're talking in a situation where there's a spouse and a significant other, and it takes both incomes to be paying the mortgage and the household expenses, I think they understand. You sit down and you say, well, Mary, what should happen if your spouse, were to have passed away yesterday, what would you be doing now? What would you have to do? Would you have to be looking to move in with your mother or with a friend? Or would you be able to take care of this mortgage if something happened to your spouse, and vice versa? So I think in that situation where you have two people and it takes both their incomes to cover the mortgage, they have more of an understanding that they need to put something in place to take care of that.
Uh-huh. Tell me, what is the number one factor for you, or reason or cause that gets you up and excited about meeting and greeting and explaining insurance to people? What is it that makes you continue on and stay with it? Because it is not an easy business and such a needed business. We all need it. And yet most of us are not attuned or synced into the hunger and the need for it. So what is it that gets you up and going each and every day to approach and share and exchange with people their need for what you offer?
Just that I know that what a benefit it is to people. It's such a relief when you do have this in place. And when something happens, some devastating situation happens, or an illness, whatever it is, it's such a relief to know that it's, at least financially, it's taken care of. And I just know how people can be totally devastated when this isn't taken care of. So it's just on my heart to educate people to understand this.
You gave the key word there, to educate people. And the short time that I was in the business, I saw that happening all around me. And I also saw the people who were not keen for it for numerous reasons, but yet they had an openness to hear, to listen, and the connection that you make one-on-one, heart to heart. And so sooner than later, they come around and see the need for it. And approaching and getting them to see that need is very much a hard, I don't even like the word sell. It's a connecting. It's where they believe and trust and know that you have their welfare at heart and you want the best for them. That's really, really important. And you have that X factor, Cynthia, so I'm sure it's an easy call for you. Now, there's something that everybody's talking about, not of late, but for a while there, it comes and goes. AFLAC. What is AFLAC? How does that tie into commercial insurance, life insurance? How does that relate for you? How can you explain AFLAC to people who are maybe not familiar with it?
Right. Well, I personally don't sell AFLAC, but it is more for if you have a disability and you're not able to work for a while, that it will help pick up the extra medical expenses, or it doesn't even have to be medical expenses, but obviously if you're not working, all your expenses taken care of. And AFLAC would come in and take care of that.
So here was the reason for that question. If one is on point and doing all the things that they need to, and they have life insurance with living benefits, would there be a need for AFLACs?
I don't think so. There may be, in order to qualify for the living benefits, you have to fulfill certain requirements. So you really do need to read your policy carefully. But it would take care of some of the situations that AFLAC would take care of. Now, there may be some situations that AFLAC takes care of that wouldn't be covered. It's not as serious a situation.
Okay, I get that. How do you determine the amount of living benefits that one's going to require? How do you come to that? How is it determined how much in living benefits someone is going to need attached to their life insurance policy?
Well, basically, we try to find a life insurance policy that the person can afford. So it has to be something that fits in their budget. And obviously, the younger they are, the more face value they're going to be able to get for less premium. So the living benefit is basically a percentage, up to, like I was saying, they could accelerate up to 95% of that face value. So if you had a $500,000 life insurance policy to get what 450,000, out of that. You had one of these events that quality of living benefits realm. So it just depends on what the face value of your policy is, and it depends how much you're willing to spend, what you can afford to spend as far as what you get in the face.
Yeah, I think, Cynthia, I think a lot of people, you and I might know that, but I think a lot of people are not aware of the different categories and brackets that you can purchase this life insurance with living benefits. So that's good for people to know, because my thinking, and you tell me, it's been so long for me, I think a lot of people think that they can't afford life insurance. What do you say about that?
Well, I think most people don't realize they really can afford at least to get something in place.
Yes.
Now, sometimes we'll go sit down with a person. They may not be able, let's say we're talking about the mortgage protection idea, and they may have a $300,000 mortgage. Well, if they're an older person, I may not be able to get them a policy for a full $300,000, but I could get them something, a policy for $100,000. And the way we're not able to cover the whole mortgage, but if something, let's say something happens to Mary, the bank isn't going to come to John and say, we need you to pay, off the mortgage tomorrow. No, they just want to see the monthly payments.
Yes.
So you just want to make sure that you have enough insurance that you can cover, let's say, 1 or 2 years of payments. That gives you some time to decide, what am I going to do? Am I going to try to refinance the house? What are my next steps? You're not put in a situation where you're going to have to make a decision in the next 3 months before you get foreclosed on. So that's, what the average ends up being is that most people will spend around $88 a month for a policy, whatever. And then depending on their age and their medical condition, that will determine what the face value will be on their policy.
That's good to know. That's a good point of information. Time flies here and it goes quickly. Before we say so long for now, give us one scenario, one story. You start our stories, always relay the conversation, makes it clear. Give us one story that really filled you up and something that you did in bringing the need for life insurance and living benefits to someone. And after the fact, maybe it was a difficult sell, but when you did, they came to you later and they were so grateful. I'm sure you have many stories, but which story really that you can share with us that really makes it and brings it home to the audience, the people who are tuning in?
Well, I met one gal. I actually had a booth set up at a 5K, and I actually met, it was the aunt of the gal, and then I met the gal. I went to their house, and they wanted to actually get insurance on their mother, and I explained all of it, and I guess I don't want to give out too much personal information, but there was a medical situation that they really thought that they wouldn't be able to get insurance for this person. And it was the policy that we were choosing actually had an in-home interview that you do on the phone. And so we did that interview, and they said not only did she qualify for standard, but she qualified at the preferred rate, even though she had this medical situation. Wow. So we were able to get her a better policy at a better price. And everybody was very happy all around that we were able to get this in place, because they really didn't think that they were going to be able to do that. So, and I've kept in touch with them, and they are very grateful for that.
Well, that's a good story to end with. You know why? Because we all, every last one of us, I don't care what education, background, money, everybody wants to be offered a little bit more than what they're offered. Or what they think they're given for whatever reason. And then when you can put an extra perk in there, it's like, wow, this is fantastic. It's like my husband and I, everybody knows we love Starbucks, right? So we go there often. And after 12 Starbucks drinks, you get a free one. Well, it's not free. You pay for it 5 times over, but it sounds good, right?
Right.
We buy it.
Exactly. Yeah.
Cynthia, thank you so much. All of your data and all of your information will go up on the video. And then within a short time, we'll get that over to you and you can use it however you like. I think you shared a lot of information here that will benefit people when they tune in and listen to it. And I'm grateful for you and I'm thankful to you because you did work on that sound. And I don't know, but I think when you listen back, you're going to be pleased with it. So I'm going to put you to the side for now. Is there anything you want to leave us with before you say so long for now? Is there one comment or remark or something you want to leave and say before I say so long for now? I'm going to put you to the side, but I'm going to ask you to hold there until I say goodbye to the audience. But is there anything you want to say to us before we say goodbye for now or so long for now?
Well, I just want to also mention that this is a great field. If anybody's actually interested in looking for part-time or something that could even work into a position, I can help you do that. So feel free to get in touch with me and I can go.
I think that's fantastic because a lot of people want more information, and if they need that, they can get you. So there's no better way to end. I'm going to say so long for now and put you to the side, and I'll be back with you in just a second. And thank you.
Okay.
Thank you.
Thank you.
Now let's see what I have here. Well, time flies and it's gone before you know it. And before we can start, it's over. But that's the nature of the wonderful, I don't like to say beast, the nature of the animal. It's the new year. It's exciting. And I thought having someone who has a financial background and is interested in insurance and life insurance and living benefits would be timely to start the year off. Because it's not something that people are just jumping and hopping to skip into. And yet it's something that we all need at different times in our lives. And the sooner we are aware of it and take part in acquiring the knowledge and the information that we need, the better off we're going to be in the long run. So I'm hoping that this year will be magical for you. Each and every one of you. If you're tuning in for the first time, please put in #replay, and then that will let me know that you were here. And also put in the comments, ladies. We're asking for women who are interested in living and leaving living legacies to join our Facebook group. And you'll be welcome there and you'll get so much information. So please just type in ladies in the comments and you'll be automatically connected to my Facebook group. And until we meet the next time, which will be next Tuesday at 7 o'clock for Style with Joy, we're back on point. We're back into what's ever normal. I don't know what normal is, but we're back on a regular routine schedule. And I'm asking all of you to stay tuned and stay with us. We have lots of excitement on the way, great guests, great information to share with you, and it won't be any fun unless you're with us. So wherever you are and whatever you're about, make this year the best year ever. Enjoy. Stay tuned. Stay with us. And I look forward to seeing you again real soon, like next Tuesday at 7 p.m. Good night for now. Ciao.